So in Chapter 4, we're going to look at allocating overhead in more depth. In Chapter 3, when we were talking about job costing, we talked about using the predetermined overhead rate to allocate overhead to jobs. And we said when we got to the end of the period, we would be either over-allocated or under-allocated. And there's problems in both situations. So we really want to try and be as accurate as possible when we allocate overhead. So let's just review a few things that we've already learned. So first off, what are the three components of product costs? What are our three product costs or manufacturing costs, right? We learned this back in Chapter 2. They're direct materials, direct labor, and manufacturing overhead. And what is manufacturing overhead? Manufacturing overhead are the indirect manufacturing costs that we can't trace to the product, right? So there are things like the indirect materials, indirect labor, and the plant utilities, the plant manager salaries, the plant janitor salaries would be the indirect labor, depreciation on the plant, depreciation on the equipment, right? All of those things. All the manufacturing costs that are not direct materials or direct labor are manufacturing overhead. And we allocate the cost to a product or to a job using our predetermined overhead rate. So before the start of the period, we determine this overhead rate. We estimate the total manufacturing overhead costs, and we divide that by the total estimated allocation base. And so the most common allocation bases are going to be machine hours or direct labor hours. So as part of our budgeting process, and we'll do this later in the semester, you will estimate what are the total machine hours do you expect to use? What are the total direct labor hours if that's your allocation base? And then also the overhead is going to be estimated as part of the budgeting process. So we can divide to get that predetermined overhead rate. But we can have some problems if we don't allocate our overhead correctly. So we could set an inaccurate selling price. We might remove a product line that's profitable. That's what we'll see in some of our problems this time. We'll think that a product line is not profitable because it is picking up some of the overhead for another product line. And then also, when we understand how costing works, right? Or if we don't understand how costing works, then we can't improve our processes. So we really do want to be as accurate as possible with estimating the overhead, because that will make us look more closely at our operations. And so we want to refine the allocation of overhead. We want to make it more accurate. And so using just one predetermined overhead rate, we call that a plant-wide rate. It's just a single rate that we're using. And we're finding that, or it has been found, that is less accurate because companies are making a variety of products in the same plant. And so we're using one predetermined overhead rate, even though we have different products that are going to be incurring overhead differently. And so it doesn't make sense to just use one overhead rate. And then as well, indirect costs have become a larger portion of the total cost. A lot of things are automated now. And so we're seeing that those, depreciation on the equipment, types of things are a bigger percentage of our total manufacturing overhead. So getting the allocation of overhead correctly is key to us being able to cost our product and then determine a price for our product. And so if we are making more than one product and they use the resources differently because maybe one has a more complicated process than the other product, then using a single predetermined overhead rate is not going to be accurate. So we need to refine the method of allocating overhead. We need to make that a more accurate way to allocate. So we find out, as we've said, we're mismatching our resources. We're also finding out cost distortion, where one product is picking up the overhead for another product, right? So one product, we're allocating too much overhead to it, and the other product, we're not allocating enough. So we're not accurately pricing either one of our products. And so we're going to be focusing on how manufacturing operations can refine their allocation of overhead, because once you understand how a manufacturer does it, it's easy to apply to a service business. So here's an example of cost distortion. So we have estimated manufacturing overhead of $500,000, and our allocation base is direct labor hours, and direct labor hours are estimated to be 50,000, right? So this is all done as part of the budgeting process before the period starts. And so we can get our predetermined overhead rate. We'll just divide the estimated manufacturing overhead by the estimated direct labor hours. So for this calculation, the 500,000 divided by the 50 gives us a predetermined manufacturing overhead rate of $10 per direct labor hour. So now when we want to allocate overhead to job 1 and job 2, they both use 10 direct labor hours. So we would take the $10 per direct labor hour predetermined manufacturing overhead rate, multiply it by the 10 direct labor hours used for the job. So they would each get $100 of overhead allocated to them. Okay. And so that's how it works, using the plant-wide rate, the predetermined overhead rate, just a single rate for everything that you are manufacturing. Some companies decide to use departmental overhead rates. And so this is going to be a method of refining our overhead rate. This is a method of making it more accurate. So each department is going to have its own overhead rate. And so this is a good idea when the departments have different amounts of manufacturing overhead, and the jobs or the products use the departments to different extents. So one department might incur a lot of overhead, and so if a product uses that department more than the other products do, then that product will get more overhead allocated to it. So here's an example. The assembly department, we have estimated overhead of 200,000. Direct labor hours are 40,000. The finishing department has estimated overhead of 300,000, estimated direct labor hours of 10,000, right? So in our other example, right, this was the 200 plus the 300. That was the 500,000 of overhead, but now it's been split between the departments. And the 50,000 of direct labor hours have been split between the departments. When they have refined it, they've gone from using the single rate to the departmental rate. So then we can find the departmental overhead rate for the assembly department. We take the estimated overhead of 200,000 divided by the 40,000, and so our assembly department overhead rate is $5 per direct labor hour. The finishing department, the 300,000 is divided by the 10,000, and so in the finishing department, the overhead rate is $30 per direct labor hour. And so if job 1 used 9 hours in the assembly department and 1 hour in the finishing department, the overhead allocated, we take the 9 assembly hours and multiply it by the $5 assembly overhead rate. So that comes to 45. And then in the finishing department, 1 direct labor hour at a $30 rate. So that comes to $30. So when we add together the 45 and the 30, the overhead allocated to job 1 is 75. Now for job 2, they also used 10 hours. So under the predetermined method, job 2 was allocated the same amount of overhead as job 1, but 4 hours are from the assembly department that has a $5 rate. 6 hours are from the finishing department that has a $30 rate. So the 4 times the 5 is 20. The 6 times the 30 is 180. 20 plus 180 means 200 is being allocated to job 2. So we can see job 1, using the plant-wide rate, 100 was allocated to job 1. Using the department rate, we can see it's really only incurring 75. So job 1 was overcosted using the traditional method, which is just the plant-wide rate. Job 2 got 100 allocated to it using the traditional method, just the single predetermined overhead rate. But using department rates, we see it's actually incurring 200. So job 3 is undercosted using the plant-wide rate. Well, I mean, I think we can see it's not good to overcost something because we could be losing customers then if we're overcosting, right? Then we're probably charging them more. It's not good to be undercosting either, right? Because we're probably not charging enough. Maybe we're getting more clients, but we're not billing them for the correct amount of overhead. And we should be charging those clients more. So it's really important to be as accurate as possible with your allocation of your overhead. And that's where departmental overhead rates can be helpful in refining the allocation of overhead. Next, we're going to look at a way of refining it even further, making it even more accurate when you allocate overhead. But it's going to take a lot more work to do that. So you kind of have to weigh the cost of implementing a more detailed system with the benefits of getting the most accurate costing. And so the next method we're going to talk about in the next video is called activity-based costing.